Welcome to the Sports Umbrella, where we cover all aspects of sports. Soak in all the knowledge from our guests who range from pro athletes playing up a storm to industry experts making it rain. My name's Kelly Okun, and I'm a former pro golfer and founder and CEO of Fairway to Green, an equitable sports media company. Joining us this episode, presented by GalwayPlus, is Drew Sheinman, a founding partner of Brand Velocity Group. Drew exemplifies profit with purpose within his private equity firm, which specializes in sports investing. Drew, thank you so much for joining us. Can you please tell me a little bit about what you do in sports investing, what you've done with Brand Velocity Group?
Yeah, sure. It's great to be here. Thanks for having me. Brand Velocity Group is a private equity investment firm. We're not a fund. We're what's called an independent sponsor, which means we do SPVs, deal by deal. And focus is two areas, really: consumer on a buyout side, and then sports on the buyout and the growth equity side of investing opportunities. We take great pride in being highly differentiated as a private equity investment firm because we're nice people. And we care about employees and care about corporate culture. We have a first ever program called Share the Gains, where we take 10% of the GP's carried interest and we give it back to the employees of the companies we buy. So very much aligned with like who we are and how we think about the world, and really how we're trying to change the perception of private equity. And we're here obviously at the Galway event, Profit with Purpose, so that's really very much aligned with who we are, which is how I met John Hahn, coincidentally. Well, nothing's coincidental, but so that's part of. We just hired, I guess now about a year ago, a chief people culture officer for our firm and for our portfolio companies, and she's awesome. She had a similar job at Patagonia, so kind of the poster child of good corporate culture. And when we started our firm, now I guess about 6 years ago, we started out with nothing. No deals, no office, no income, just a vision and a mission. And so we could sense we're very entrepreneurial, and we love that kind of entrepreneurial spirit. And hiring somebody like Lauren, when you're an entrepreneur, you're trying to figure out the right measurements and milestones for success. Like, we feel great that we could hire and recruit somebody like that to join our firm is really special.
What inspired you to focus on the people? I saw you had very clear core values on your website and the Share the Gains program. What inspired that, and what success have you seen from that, just because you care about the people?
Yeah, I think there's a couple of things. One is my founding partner who I met, which was basically impetus to creating BVG, because I always wanted to be on the side of capital. To be honest, I could never find that investment professional that complemented me, that I liked and trusted enough. I found that person, Steve Leibowitz, when I was at Endeavor and I started the Talent Brand Ventures Group. Kobe Bryant was a client. On behalf of Kobe, I read about this really interesting technology educational toy company. I figured it's Kobe Bryant reaching out to the CEO wasn't good enough. I had to find the owner. So I did what Drew has a history of doing, did my research, called Steve cold, we hit it off. And then based on our friendship and going through the deal process, we had a shared vision for doing what we're doing today. So Steve's background, 20 years in private equity, he got tired of the sharp elbows, the arrogance of private equity, which a lot of that honestly exists. So that was part of the interest in the focus on corporate culture. For me, I take great pride in just being a good quality human being. I'm on the board of kindness.org, so I really believe in leaning into being kind, and kindness can change the world. And the group that I'm affiliated with, in fact, they're research and data driven. And part of what makes them very different is they have data that supports kindness can enhance profitability and productivity. So at some point we will bring them into our world of private equity, but that's a big part of it. Then just like when you're investing in a company, you're investing in the leaders. The company has to have great fundamentals, but the leaders have to really drive the success of the company. And too often, private equity historically has not been focused on that, and we think about it very differently. So the impact to our portfolio companies and our style typically has been not, again, typical private equity. We like to let the CEOs run the companies. We check in unless we have to check in and lean in further, but largely it's their company to run. And that's why those CEOs enjoy working with a firm like ours, and very differentiated compared to others, because honestly, there are a lot of horror stories out there of people who sell their companies, they take some chips off the table, and they have an awful existence post-sale. So we try to make it pleasant, and we turn the model upside down, giving the founders and the CEO and team a good ride with us, and having the employees feel like they're aligned with the interest with Share the Gains.
That's incredible. I know just with my experience in entrepreneurship, when I think about fundraising, I'm terrified of it because
It can be terrifying.
the stories are a little scary about what happens when you give up
choose
control.
your partners really well in any form of business, but particularly on the investment side. It's hard because if you're an entrepreneur, depending on the stage of the business, like you have to raise capital. So oftentimes you don't have the luxury of deciding, oh, I'm going to just select this person or this group versus another. You have to find the money to survive. So that's a delicate balance.
Yeah. Wow. Well, thank you for being a leader in that part of the
Yeah,
industry,
thank
because
you.
I know we need more people, and I'm sure a lot of business school students would want to work for you because they just sort of accept the state that private equity and investment banking in general is in right now.
Well, it's funny you said that because we actually, with the Share the Gains program, Yale University did a case study on us. And this was, I guess, right after kind of the first phase of COVID. And after a while, they said, all right, you guys can actually come and present to the students, the MBA students. And we went to Yale, and my partners and I like, wow, this is going to be an offer. These MBA students are going to grill the crap out of us. Like, so the 300 MBA students, and 3 of us were up there, and they interviewed us, talked about the case study. And I remember they asked a few questions, and to a person, myself and my partners, we said, like, you know, we don't have the answers. Like, that's why we're here, to learn from you. I remember after the event, one of the kids came up to me and said, like, wow, you guys really are different. You actually wanted our opinion. You don't have all the answers. So I think that's representative of like a different model. Private equity should be a great career path. For a lot of people, it's just not. But that's part of the mission and the vision we have.
I love that. I think you're already doing great things. Now, with all of your experience with MLB, sports marketing, venture investing, how have you seen sports as an asset class investment really evolve over the last couple of decades?
Well, a couple of decades. I think I say the last couple of months or the last couple of years, decades.
That's true. We can do short-term
Yeah,
changes.
we'll do short-term because it has changed dramatically. And I think it's Mark Lazary from Avenue Sports Capital who said, like, it's the first inning. And it is. Like, with all the buzz and all the enthusiasm and even what we're hearing today in these panels, like, it's still very early days. So some of the businesses with all the hype and excitement are going to play out and, you know, maybe lose their value over time because some of the valuations, particularly on the team side, are just insane. But it's exciting. It's a great time to be an investor in sports. It's a great time to have our approach of caring about employees, caring about culture, and also leaning in operationally. So we like to say capital is a commodity. We bring all this operational expertise to the table and really help grow the company, whether it be marketing, business development, opening up doors. We have a great advisory board in our sports group that are some of the top sports professionals there are in the industry across every aspect of sports management, which is really exciting. We also have Eli Manning as a business partner. Eli has been a partner of the firm for the last 3 years. And we got to the Mannings through a company we own called Barbecue Guys, which is the largest direct-to-consumer marketplace for home grilling and outdoor living products. And for that company, we brought on board investors, raising the capital deal by deal. And so I said, oh, it'd be great. Company's based in Baton Rouge, Louisiana. It would be great to get the Manning family involved. So every Manning family member invested. I don't mind saying that about real checks, not phantom equity, which was great. And then obviously you got to know Eli and he became a partner, which has been outstanding. Because when you're highly differentiated, having somebody like Eli, who first of all personifies everything we're talking about, culture, positive ethos, core values, having him out there and helping talk about a company is hugely valuable.
It is, and it sounds like you're diversified across different sports as well. Do you have any that you specialize in, or is it where you see the good opportunities?
It's a great question. It's pretty agnostic in terms of where the best opportunity is, because I know golf is your zone. It's like, I love golf. We've looked at a bunch of different golf businesses. So we invest in companies with a certain level of EBITDA, not early stage pre-revenue. It has to have some level of business success. And golf is particularly exciting to me because of all of our athlete connectivity. And you know, and I know athletes love golf. So if you could bring them, I was going to say if you could tee up, that's really a bad pun. I can't say that. But if you could bring them an opportunity that aligns with a good business investment and something they're passionate about, that's really where the magic happens.
Yeah, are you looking for any other characteristics when you're sort of going through these deals? You mentioned they have to have some EBITDA, they have to align passion with interest. Anything else that you're looking for?
Yeah, I'm kind of the white space guy. So like, where's the white space to grow the company in a kind of traditional or non-traditional way? but you can assess from a financial standpoint where the opportunities are for growth. And again, where we can really lean in, and we'll spend the time up front to do that thinking and to try to do the analysis to figure out where we can create value.
What does the due diligence look like in a brand new idea where there's white space? I mean, it must be a lot of work, but there's also probably not a lot of precedent what's happening now, at least in the last few months.
Yeah, well, first, we're not focused on brand new ideas. So the companies, again, are at a certain level. So it doesn't mean that due diligence is any less intense, because it is intense. And being new to private equity for the last 6 or 7 years, you know, how they say, like, you start a job, you build a new muscle. Well, I've built a new body. So like, it's been a lot of learning, and the diligence part is pretty intense. It has to be, because we're the general partner, we're responsible for the LPs who are investing with us. We have to make sure that the company checks all the boxes on the front end, and we have confidence enough to go bring the investment opportunity to them. And then once you do that, then you have to go manage the company in a successful way to keep those relationships in a positive way.
Wow. A lot of work.
It's a lot of work. It's a lot of work.
With the conversions of sports media and tech, where do you see the greatest white space for product innovation and really just returns in general?
I think it's still evolving. I think, yeah, you're seeing ESPN just launch their new app a couple weeks ago. Like, it's still evolving. The linearization of what's happening today in media is happening quickly, but really not that fast in terms of adoption from consumers and new business models. So I think that's part of it. And that's the macro. Then there's the micro. And talked a lot about here today, like athletes taking control of their own brands and their own media platforms. Like, how many times this week have you seen an athlete announce they're starting a new production company, or last week? Is it still early this week? Today I think is Monday, but a lot. So there's only so many great content ideas that are possible to be successful with. I think that's one of the other things, like when you're an investor in sports, and I'm passionate about sports, been in it my whole life and worked around every possible aspect of sports. You just have to be a little bit more thoughtful about where the real opportunity is, because there's a lot of noise. So separating the noise from the real value opportunity, and that's where sophisticated investors can win. And it means you say no a lot. You really don't do that many deals, because there's a lot of opportunities that you do the diligence for, and you decide it's not really a good quality investment.
GalwayPlus is the proud sponsor of the Sports Umbrella. GalwayPlus Sports and Entertainment is the first of its kind platform in the wealth and risk management sectors, designed to cater to the diverse needs of affluent individuals, teams, leagues, and organizations operating within the sports and entertainment industries. Learn more at GalwayPlus.com. How would you categorize women's sports? Do you think it's a lot of noise right now, or do you think there's a lot of opportunity there?
I think it's positive noise. My dad used to have an expression, happy noise. I think it's happy noise. It's great for women. I have a daughter, I have a granddaughter. Like, it's great. I love to see that. I think that is awesome. I've always been a huge advocate for women in business and men in sports. So I think it's great noise. I think it's still going to take time for playing it out over time to see if it's really a successful investment. But there's so many dimensions to that. It's not just the Caitlin Clark, WNBA. Like, there's so many other aspects. To give you an example, we're looking at flag football. And flag football, everybody thinks is going to be the next big thing. And it's interesting, most of the people who are interested, including us, like, see more excitement around women than they do in men. And that's not something that's kind of gone visible yet. It's not breaking news here either, but it's out there. Like, women are really excited about flag football, and they're really good at it. Frankly, they're better and more exciting to watch than men are. So that's great. Those kind of new opportunities for impact and visibility are just going to continue to grow.
Great. And when we're looking at any sports in general, it could be men's, women's, wherever, are you seeing lots of team investments? Is it product and new brands? Is it new media companies or production companies? What sort of investments are you seeing popping up?
We're seeing most everything, which is good, because when you're an investor, you want to see deal flow, right? Have a great pipeline. So by the nature of who we are, our visibility, kind of our brand, we see most everything. But by also, to be successful in this world, it's all relationships. So coming to this event, or 20 other events I've been to in the last month, like, it's all relationships, and I love it, because these are people I know from the past or the present or the future, and people got to hear your story, and then you got to build the trust. It's all about trust, and private equity, just like any other industry, you've got to build the relationships, have the trust, get the trust of the people who want to sell you their company, or accept your capital, and then also go raise the capital to support doing the deal. So that's a big part of it. So we do see all sorts of deals. We own a youth sports uniform company called Score Sports, and it's founded by two sisters who were from Brazil, so the foundations, as you might imagine, were soccer. Now they've evolved into baseball with a deal with Baby Ruth Baseball League. And we're going to continue to evolve into other categories of business, but it's a great business. It serves kids 4 to 12 years old. And it's high quality, very affordable. So it's a great company, but it's also doing good in the world for kids playing sports. And for that deal, I brought on board as investors Carmelo Anthony, Tim Tebow, Carly Lloyd, the Mannings, Klay Thompson, Marcus Smart, a bunch of really great investors who really care about youth sports. And again, that's that alignment. When it comes together, it's really powerful.
Yeah, and all the relationships too, because you
Exactly.
might be getting approached with different opportunities, but then you also have your network that you can bring to the opportunities.
Exactly.
Yeah,
Exactly.
I love that.
Yep.
Obviously, sports are blowing up right now with the high valuations and everything like that. What advice would you give to people who want to go into sports investing?
I'd say do the homework, get smart. There's a lot of great events to listen to people and take the time to really understand like what their opportunities are. It's okay if it's a passion play, then just accept it's a passion play, and that could take you down a different path. Like some of these investors are trophy investors in the NFL or some of the team deals. But that's okay. If you have that kind of money and you just want to hang out and have the one toy that you never had, that's fine. That's not our business model, but it can work brilliantly for some people, and there are plenty of opportunities out there. But I'd say just get really smart. There are enough really credible people out there that will actually spend the time to educate you. Because a big part of what I spend my time on is just that, educating, particularly family offices, which is a sweet spot for the kind of investors we want. A lot of it's just education, knowing where the opportunities are, where the best investment positions are for them to participate in, or listening to them. If they might say, hey, by the way, like we have a passion in soccer or youth sports or whatever, then you can go find the deals knowing that you have their interest and support. But the other part is just have, like anything else in business, just have good people around you to understand the opportunities.
Definitely. And for someone who wants to be like you and in the center of it
Like
all,
me?
how do they get into that space? Because I know sports can be a hard industry to break into if you weren't actively playing or in it already for another reason. How do they become you?
Yeah. Well, becoming me might be challenging. There's like one.
Someone like you.
Yeah, it's okay. But it is like, it's the old cliche, it's like a small fraternity. It is. But it's relationships. But I think in today's world, like there are different avenues than when I started. You could go to school and study sports management. And typically, if you have a good sports management program, you could get a good internship and get kind of on the board of like being involved in sports, and then just use your ingenuity and your connectivity to meet people. But I'd say that's one path. Another path is just create. There's so much opportunity today. You could create content. You could do it in your bedroom, you know? And then you show that initiative when you get in front of people. And obviously it's the old classic networking, just sit down with people, not necessarily looking for a job, but just to learn and understand. Because people like myself, we want to pay it forward. We want to help kids understand how to get into the business. But there are a lot of different paths. There's like business development, sales, data analytics, like these new categories, research, new categories that heretofore, technology, AI, what's going on. There are new categories where people can really participate in, which is great. It's exciting, but you have to really want it. That's the key. It's not just because I'm a passionate sports fan. You really want to get in there and do the work. And I kind of test, if somebody introduces me to somebody, to say, hey, Drew, would you mind talking to who or whatever? Like, I said, sure. So if the person emails me, by design, I'm a nice person. I'm not doing this in a bad way, but I won't respond. Because I want to see if they follow up. I want to see how bad they want it. Because if it's just like a quick email, that anybody could do that. But if they really are interested, you follow up and you show the perseverance. Because it's hard, but it's definitely doable. And particularly now, there's such an expansive world of opportunity. And you could take classes online. You could go to school and take classes. You know, sports investing is a new category of business that's indirectly to investment in finance management. So there are plenty of opportunities to pursue.
Wow, so many resources.
Yeah.
And this might be asking you to choose a favorite child, but what has been one of your more memorable investments, and one, I can't say your favorite investment because I can't ask you to choose that, but what's been a very memorable one that either surprised you or that you were always really excited about?
Yeah. Well, at least you didn't ask me about my kids, because that would have been trouble. But I would say barbecue guys, not because and we haven't had an exit yet because we're still new, so that's coming probably in a couple of years. But I'd say barbecue guys just because of the category. It's a great lifestyle category, grilling, outdoor living, it's fun. Then the whole kind of genius of packaging up the Manning family as the first family connection around a business opportunity was great. Getting them excited about it, then they became ambassadors to the company. So here's a company that was very successful. EBITDA ROI is very good EBITDA, solid EBITDA. But the Mannings getting involved just elevated them, honestly elevated us too. It just put us on the map. And it was our third investment at the time. So that was clearly fun and just kind of took us to another level, and then that led to Eli becoming a partner. So I don't mind saying that, at least where we stand today, was my favorite. It'll become more of my favorite when we sell it for a good return. So.
Exactly. Well, thank you so much for sharing your experience and all your knowledge. Really great having you on here, Drew.
Look forward to finding a golf deal we can work on together.
Let's do it. Thank you so much.
All right, Kelly. Thank you.